broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on another new edition of Bazaar Morning Call. It's a Thursday morning, getting into the business end of the week. We are coming to you live as always from the CNBC TV18 Motilal Oswal studios. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Morning. Hi, morning, Prashant. Morning, Nigel. It's been a crackling market, right? I mean, at a 6-month high. I think it was just a matter of time before the bulls sort of got their act together. But let's see, big day today. You have the RBI policy as well. So I guess all the action could perhaps resume post the policy?
Post the policy or tomorrow, right?
Yeah.
So that's the clock which shows you how far the RBI policy is. It's not very far away, as you can see. Yesterday, once again, we had a solid rally. And it was just quite something to see the market take off and then hold gains, never really looking back, no shakeout, nothing. I mean, actually, if anything, in the last 40-50 minutes of trade, the Nifty added another 50 points. I mean, actually, a little more than that. Starting about a little before 2 p.m., another 50-point move started on the Nifty. We are on the Nifty 160-odd points away from an all-time high. Now, does the global backdrop help us cover that distance? That's the question, right? So let's start with that. The Nasdaq last night ended down 1.2%. The S&P was down as well. And that largely is on the back of the fact that the US 10-year yield has jumped about 14 basis points. And, yields going up is negative for tech stocks. That's a long-established, well-established connection. Why did yields jump and, the sort of tech stocks correct, but yields jump more importantly because, and this is completely unrelated to the US, you had two central banks in Australia and Canada which delivered very hawkish hikes. And that led to firming up of expectations in terms of what the Fed will do. Actually, Fed pricing moved up about 10 basis points over the last 24 hours or so. The Fed meeting is next week, and it's unrelated. They're different central banks, but that's what happened. It kind of brought to fore the idea that maybe there is more to go here. But I would say the story is not the S&P or the Nasdaq, and this is something we've pointed out the last couple of days as well. The action in the US market is moving out of technology and into other areas. So the Nasdaq is down 1.2, but the fact is it is up 30%, 32% this year. So a 1%, 1.5%, 2% pullbacks are absolutely par for the course. You're not even done for half the year, and the index is up 30% plus. So it's quite something. It's also been a constant complaint all this year that only 6 or 7 stocks have been leading the rally in the US, which is now changing, which is the positive. So, the Russell 2000, which is the small cap index, went up about 2%. And the banks index in the US once again moved up 1.5% or so. It started last Friday, and it is continuing this week as well. So I think this is the US market that you need to kind of look at when you're analyzing things and implications for us here. All right, let's just quickly run you through the levels here, which are pretty standard, and they have been for the last couple of days. The all-time high is 18,887.60. The SGX is indicating a flattish kind of start, but the underlying momentum has been very strong. There is the RBI policy, right, today. And there may be a different, a more tepid kind of market, and then a reaction function to what the RBI does and then says, the governor says in terms of commentary, etc. So second half may be a little different as compared to first half. We've seen that quite often. There have been pretty big RBI days as well. Remember the pause which happened, and I think before that as well. So in the near term, the Nifty has the high, of course, is 18,887, 18,888 for all practical purposes. That's the target. There's nothing between where we are and there. Supports 18,531 and then 18,464 are the two near-term supports. But there's distance between where we left off yesterday, and these levels. Bank Nifty, it continues to be stuck between this range of 44,499, which is, on the downside, and 43,706. So this is the level. The resistance and the support levels for the Bank Nifty are on your screen. But for the Bank Nifty also, I would say, given the underlying kind of momentum and strength we've been seeing, possibility of breaking out of this range, I would say, is on the upside rather than on the downside. It's just been that kind of a market. Broader markets in mid-caps, small caps, etc., that's something we've highlighted over and over again. And action there continues absolutely unabated. Sonia, hi.
Oh, absolutely. And, the bulls are in complete control of the market now, right? I mean, you can see it in not just the last few days, but the trajectory in the last few months, ever since the lows that we saw in the month of March, is just higher tops and higher bottoms. And just a matter of time, I guess, before we conquer those all-time highs. So the market structure remains very bullish at the moment. And the Nifty, as Prashant was also mentioning, closed above the recent high of 18,662. It's now broken above that trading range that the market was hovering in. 4 straight sessions of gains, and from the 24th March lows, which was about 16,950, there's been no looking back at all. It's not dithered even once. So higher tops, higher bottoms, and 10.5% rally from there. Both foreign and domestic investors bought in the cash markets yesterday, so that's always great to see. There was about 400 crores of buying by DIIs, about 1,500 crores of buying by FIIs. And although the monetary policy is today, there's a pause expected. I don't see any impact on the market. I think the market will just wait for this event to pass and then perhaps resume its uptrend. At least that's the feeling that you get when you look at the ticker. All eyes will now be on the FOMC meeting on the 13th and 14th. And in that context as well, a lot of economists suggest that inflation is cooling off. It's still above the central bank's 2% target. So there could be a pause this time around from the US Fed as well. But the bulls are back, and back in a big way, Nigel. What are you spotting in terms of a big trend?
Well, I'm wondering, how much of the RBI governor's dovish tone is priced in? Because yesterday the street clearly was pricing in a dovish tone. What more does he need to say for, to strike that chord that the bulls are looking forward to? The Nifty Bank, well, that's going to be the one that will need to come in there and deliver the knockout punch to the bears. Because yesterday as well, there was a relative underperformer. If we need to get to those fresh all-time highs, which is only around 150 points away from current levels, then the Nifty Bank needs to perform. And just one word of caution, there are very, very good stocks in the mid and the small cap indices. And in the mid and small cap space itself, a lot of smaller companies which are doing well, some of them have very, very good fundamental value as well out there. But just be a little bit cautious, because in the last few days, what you have been observing is some of these stocks, they are racing off, but maybe the fundamental reason may not be there. So you want to be a little bit cautious in the broader market. Just a word of caution on that front. On the index itself, yesterday we ended higher, and if you're looking at the open interest build-up, it was solid. So there was fresh buying on the Nifty futures itself. The Nifty, if you're looking at the FIs, well, they added long positions. They added long positions big times getting into this event. So they added good amount of long positioning, and they wrote puts as well to back it up. They wrote more than 2 lakh puts in a single trading session, 2 puts for every 1 call. And a couple of strikes were active, 18,700, 18,650 put. Between them, they added close to 2 crore shares, telling you the kind of writing that we've seen. And there was some out-of-the-money call buying. In case things go right, then the bulls will be happy, and maybe taking a bit of a punt. 18,850 call was fairly active. The only word of caution is the PCR now has moved to around 1.38. That's the higher end of the band. Normally, we have seen when it goes to around that 1.4, we see some bit of a pullback, or we see some bit of consolidation. So the PCR has moved to the upper end of the band. So on the upside, we can go to any levels, but I just thought in the near term, for today itself, the Nifty, you wanted to hold on to that 18,650 because that was a bit of a resistance on the way up. And the 20 DMA on the Nifty Bank, 43,951 odd. SGX Nifty is indicating a mildly green start, but we'll wait by for the RBI governor and take it from there, guys.
Okay. I also wanted to mention that there was a very interesting note that Motilal Oswal put out, I think yesterday, post-market hours, where they talk about how the corporate profit to GDP ratio has gone up substantially in 2022, and they expect it to go up further, considering the economic signs which are very strong for the economy. So there's oil and gas, there's auto sector, there is a couple of other sectors as well that they're bullish on. But corporate profits to GDP ratio surging in 2022, and the expectation is that it could improve further in 2023 as well. So that's just one point that I wanted to put on the table. Apart from that, we have commentary coming in from Bernstein this morning as well. Venugopal Gare of Bernstein saying that while the rebound has been strong and consumption indicators point towards a bottoming out, some externalities need to be watched before building the case for a further rally. The Fed action and monsoon throughout this and the next month will make things a lot clearer. Venugopal adds that domestically, the pace of consumption growth and how it recovers from bottoming remains to be seen, but even with several positives looking forward, they are waiting for a few catalysts to make a more bullish call. Bernstein remains constructive on the market as they expect it to hold up at current levels and see interest essentially in small and mid caps remaining for a bit longer.
Okay, let's get you some money market views as well. On the rupee Parul Mittal Sinha, Standard Chartered Bank says the dollar INR traded in a narrow range last week, with a dollar staying the key forex driver, even as RBI stayed focused on containing volatility. She expects the rupee to trade in a range between 82.25 to a dollar range, with light positioning ahead of the FOMC next week.
And on the bonds, Parul says that the bond yields traded ranged last week despite a volatility in global rates. Domestic liquidity improved, making RBI to mop it up via the VRRS scheme. She sees the Indian 10-year benchmark yield trade in 6.9 to 7.05 range next week, with the pause seen by the RBI MPC and the FOMC in the MPC today. Standard Chartered is expecting no change in stance and a cautious guidance today.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We'll be looking at Tata Motors, Tata Communications, Moscow Dock, Gati, Aether Industries, and Titagarh Wagons, all of them on the back of positive news flow. But on the flip side, IOC, HPCL, BPCL, and Deepak Fertilizers, well, we'll be watching out for them on the negative side.